Hey, Patrick Foran here with Foran Realty. We have been on a crazy real estate ride the last 2 years and things are changing. The question is, where is it all headed? Buyers are asking, should I buy? Sellers are asking, should I sell? The answer to both of these questions is yes. I recently connected with Amy Downey from Radius Financial to talk more about the craziness in this rapidly changing real estate market. Please take a listen to the following podcast and let me know your thoughts.
Hi, Patrick Foran here from Foran Realty, and I'm excited to be joined today by Amy Downey, who's a loan officer, mortgage broker with Radius Financial Group. Amy, thanks for coming in.
You're welcome, Pat. I love doing these types of things with you. We seem to do them once in a while, which is great. Kind of keep everyone up to date on what's going on in the market out there because there's so many changes.
Exactly. And, it's been a wild couple of years. And the last couple of months have really been crazy with the interest rates changing. And I thought it would be a good time just to have a conversation about where rates are at, where they were, where they're at, and what your crystal ball say about maybe where they're going. And then we can talk about just the overall market. So if somebody were to come to you today, what are we at, June 20th? What kind of rate do you have?
Well, it depends on the person. It all rates are they all depend on how much they're going to put down. So if it's 20%, 10%, if somebody puts down 50%, they're going to get a better rate because they're less risk to the bank. It also depends on the product. So if it's a first-time home buyer, they tend to get a little bit better rates. If it's a primary residence or second or investment, those rates are going to be a little bit higher. So it all depends on what product they go in. Typically right now, a conventional loan with good credit and a nice down payment of at least 20% is hitting about a 6% rate. They went up a little bit again last week with the market going a little crazy. And what people don't realize, it's not just the prime index rate. When the government meets and does that, that usually affects car loans and credit cards and home equities. It does affect us a little bit too, but we're mainly adjusted to the bond market. So whatever the bond market does, that affects your mortgage rates. But 6% is about what they are right now. They were probably about 5.5 about 10 days ago.
Okay, and that same person that would be at 6% today, looking backwards in time, 3 months ago might have been at.
If it was January, they probably would have been at 2.875, 3%, maybe 3.1.
So,
and that's on a 30-year fixed.
Yep, 30-year fixed, and it's hard to imagine that at 6% is still relatively cheap when you look back at history. I graduated from college. I bought my first condo. I think I was 7.5% back right around 1999, 2000. I have talked to my parents, and back in the 80s, there were rates that were in the teens.
Yeah, 17, 16%. My first loan was 9.5, and that was back in 1990. And then I refinanced thinking I was getting a great deal because I paid 2 points to get 6.5. So, and then they kept dropping and dropping and dropping. That's why some lenders favor the ARMs, adjustable mortgages, because the average person refinances every 5 or 6 years or moves. So sometimes an ARM is the way to go, especially in this type of market. You tend to get a little bit better rate, and it's locked in according to what the rate is and what the term is on that. So just say you have a 5/1 ARM, that means it's fixed for 5 years at whatever that opening rate is, and then it can adjust every year after. So that's what the 5/1 means. It can be like a 5/6 month, which means fixed for 5 years and then adjusts every 6 months. But sometimes those rates tend to be a little better, and we can get a little better pricing on them, especially in this type of market. When the 30-year fixed was at 2.875 or 2.5, depending upon product, then you're looking at a 30-year. It's not a bad deal because you're going to have such a great rate, you'll never have to refinance. And never worry about it again. So I think what you're going to see is prices are going to eventually start to roll down a little bit. And inventory, as you know, is starting to come up. I think people see with inflation and the way the stock market's been acting that the rates are going to affect what people are paying for houses. So eventually it's going to make the housing market drop a little bit because everything kind of balances itself out. So whether you were getting 2.875 6 months ago, you were paying a higher price on the house. If the prices go down and you have a higher rate, sometimes you end up paying pretty much around the same amount.
Right. Yeah, good point. Now, I looked right before we got on the call, Barnstable County for active single-family homes were just shy of 500 as of today, which is not a bad number. But if we go back in time 5 years, we were around 2,800 active homes. So we have a long way to go. We still have an inventory shortage, but as you said, I think the tide is starting to change. I think we're going to see more houses come on the market. We still have a long way to go before we come to what they consider a balanced market in terms of housing inventory. But as long as the demand is still there, the prices are still going to be up. I don't foresee any kind of crash. I certainly see an adjustment in the future. So if somebody were to think about listing their home for sale, now is the time that I would probably advise them to do it, as long as they have a plan as to where they're going. On the flip side, if somebody is a buyer, yes, the interest rates have gone up, but now's the time to lock in that house that you've been looking at, because my crystal ball is telling me the interest rates are going to continue to climb. I don't know what your experts, are telling you. And
that's what they're saying too. They feel that interest rates will be at least in the 6s by the end of the year.
Yeah.
And, people that are younger don't remember what rates were, but 6% or 6.5% was not a bad rate. The funny thing about it though is, and it's not really that funny, but is savings rates haven't gone up. And it used to be back in the day when you had like a 7% mortgage, you were getting 6% on a money market in the banks. And that pot hasn't hit yet. So here we have interest rates climbing on our lending side, but on our savings side, as you know, the stock market's been going down, but savings rates within banks are not going up. And some banks are portfolio lending. So, excuse me?
Has that happened before? As you said,
I've never known it to happen.
Right.
Usually they kind of fall with each other. If mortgage rates go up, then usually the savings rates in the banks tend to go up too. But they also have a lot of people are doing portfolio, which is within the bank, they lend against deposits, but it used to be unlimited what they could lend. Now there's a cap on, according to their deposit base, what they can lend. So eventually the smaller banks are going to hit their cap. So they don't want to use up it's like put all your eggs in one basket. They don't want to use all their portfolio lending on just anyone that walks through the door. So they're going to get a little bit picky on that as well, where, it used to be that you'd have to have 500,000 in their bank for them to portfolio a loan for you, or you may see that come up again where they wouldn't help like a first-time home buyer. Not saying it's going to, but I think you may see some of that happening.
So I think it was safe to say the banks are tightening their belts on lending guidelines as well.
Yes, well, that came about with the SAFE Act. So I think the way the government looked at it is if they gave them unlimited lending capability on deposits, if they lent on all their deposits and then we had a crash and everyone went into foreclosure, the banks would be in trouble and the government would have to come in and save them again. And they don't want to do that. So they have all these safety nets where they try to protect themselves because they know if it comes down to it, they're the ones that are going to have to, Fannie and Freddie are going to have to reach in and start helping people out again.
Right. So let's talk, if we can, just for a minute about first-time home buyers. What's your advice to somebody who's a first-time home buyer in this market?
The market's a little scary for the first-time home buyers because they tend not to be able to put as much money down, so their offers don't look as attractive as somebody, say, 50% down. But the nice part about being a first-time home buyer is you're opening like the crystal ball of all different types of lending products. So you can get on the Cape, I think the limit is if you have income of 71,000. Some people, if it's a husband and wife, will put just one person on the loan to keep it under the 71, and you can get Home Ready Home Possible. And what that does is it gives you a discount on not only your rate, but your mortgage insurance. You have FHA, which is 3.5% down, but it gives you a discount on rate. Of course, you have mortgage insurance and they also have a funding fee, but in some cases that works out really well for people. Again, you have USDA, they have a 1% funding fee, and their MI mortgage insurance is 0.35% per month. And it's 100% financing. So if you can get in that, the discount on that rate is really good. Just to give you an idea, I did a refinance on USDA last year, about I think this time last year, and I got 2.25% for 30 years on a refinance.
Wow.
So I would say you might be able to get in the USDA or the Home Ready markets, in FHA, you may be in the 5s.
Wow.
And in some cases, maybe in the low 5s. It depends.
Yeah.
So I think it is a good time for them to buy.
No, I agree. I just wanted to get your expert opinion from the lending side. Amy, you've done a lot of deals together, and it's always a pleasure working with you. So with the cost of living just going through the roof, I know we advise people, don't go out and buy a new car. Don't buy furniture. Get through the closing. There's employment verification, employment verification. They run credit checks, everything, sometimes a day or two before closing.
Correct.
Any other tips that you might want to throw out there to somebody who's going through the process of don't do?
Yeah. Well, one thing you can do too is if you think about it with the housing market down here and how high the rates are and how hard it is to find, a rental, they have to come up with first, last, and security. So they could look at that security deposit in that last month as maybe helping with their down payment. But you definitely don't want to lease a car, for one thing, because at least if you own the car and you can bring a payment down, if you have the money, can make a large down payment and bring that payment down to 10 payments. And we don't count that in the debt to income ratio. But if it's a lease, we do, because you have to have a car. And if you turn in a lease, you have to buy another car. So that's the way they look at that. But as far as credit cards, if you're getting ready to buy and you want to have good credit, you want to keep your limits down, because you go over 33%, your credit score is going to drop. You go over 50%, it's going to drop even more. Don't close any credit cards. So if you can, try not to use them. If you use them, pay them off every month, that type of thing. But you are right. We've had people that 2 days before the closing have gone out and to Bob's and bought furniture for the house because they're moving in 2 days and have been told, now you don't qualify anymore. Right. So you need to, they've had to return their furniture. We have a company called Credit Plus that works with the credit bureaus and us. And anytime new credit is opened, they're notified and they notify us right up until the closing. So people need to be aware, if you're taking out any new credit, they're going to find out about it.
Yeah.
And they find out things like, even if you're on the deed to a house, but it's your parents' house. So be careful if you're co-signing. We have a lot of people that co-sign. If you have student loans and the kids are still in school, we're going to hit you for that 1% payment. And we're going to have to, even though you say it's your son's and they're going to pay it, unless that person has paid that student loan for 1 year, we're going to hit them with a 1% payment. So, that can really kill someone on their debt to income. But once the students are out and they can show they've been paying it for a year, we get 12 months of statements or canceled checks, but usually it's statements because every youngster does the online banking. They don't write checks. So we have to get 12 months of statements to show someone else is making that payment. The same goes with a car. If you co-sign a car for, say, your son or your daughter, that's going to affect your debt to income unless they've been making that payment for 1 year. And it goes for non-occupant co-borrowers that co-sign a loan for someone. And now you want to go, the parent wants to go and buy a second home. They may not qualify unless they, that son or that daughter has been making that mortgage payment for a year.
Wow, all good things. I wasn't aware of it. But,
Mhm.
we generally tell people don't spend any money on anything you don't need to survive until you're through the closing.
Correct. And if you have money at home, it needs to go in the bank because they do verification of deposits and it can't be more than 25% of your income. So if you make any type of large deposit, the underwriter is going to question it. If you say, well, it's cash I had at home, you can't use it anymore.
Right.
And that happens a lot. Another one to bring up is UTMA accounts. Minors Act in Massachusetts, where parents set up savings accounts for their children and their children's social security number. And it's supposed in benefit for the children. So when they turn 18, it becomes their money. I have had 2 instances where people have put their money that they're using for down payment in these accounts. And then they go to transfer it over to use it and they can't because it's really the child's money. It's under the child's social security number. The child's under 18 and can't sign a contract. So the child can't gift you the money. So that's another one is make sure it's in your name and it's in a bank. If it's a joint account and the other person isn't on the loan with you, they have to sign a letter giving you permission to use the money. So just think of that, Pat, when you go to buy a new house.
Yeah, lots of little things to think about it. And then that's one of the nice things when people work with you, you can kind of guide them on don't do this, don't do that, and answer questions that they have. Because I'm sure, just like me, you could write a book. Probably bestseller on the New York Times bestseller list.
Well, one thing too is I used to manage banks. So I have both, I see both sides of everything. I have people when they need to verify, they get 2 months of bank statements, then they have to get, they're all of a sudden the deposit checks go in and they have to get the statement, well, printout from the last statement. And there's a way to do it and they have to have it stamped and signed. I usually just say, call me when you get to the bank and I'll explain to the teller what you need done because I know the lingo. So it works out pretty well, but
great.
Yeah.
All right. Well, I think it's going to be a very interesting next 6 to 12 months, both in the real estate market and in the lending area as well. Amy, how does somebody get in touch with you if they wanted to talk to you about financing?
If anyone wants to get in touch with me, one is you can email me at adowney@radiusgrp.com, or they can reach me on my cell phone, 508-648-9422. And the cell phone is all I use. I don't use the office line. So I, as you know, answer my phone on the weekends and at night too.
And you come to people. I mean, it's great. You don't have to go somewhere. You come to them, which is also nice. So
and I do have an office here on the Cape too, if they do want to meet in person. So that's not a problem either.
Right. So no, you're great to work with, and I highly recommend everybody give you a shout and have one of those confidential conversations to see what they can afford.
Exactly. And I think you're going to see a lot more first-time home buyers in this market in a year from now. I think that when the rates go up a little and the housing market comes down a little, it's going to open things up more for those people that weren't able to purchase during this time because they couldn't go 100,000 over asking. They go out and they get a house, and if they get the offer and it's 50,000 over asking and it doesn't appraise for that, they have to come up with that difference. So most first-time home buyers don't have that.
Right. Exactly.
But that's what I mean. If you're renting right now in this market, I'm on a Cape Cod rental website and I saw someone put in, I can afford up to 6,000 a month. Well, if you can afford 6,000 a month, you might want to get a mortgage.
Right.
I mean, most rents down here are at least 2,000. You can find something if you go to a condo. And it's, it's not going to have all the bells and whistles. And that's what I tell my first time home buyers is sometimes you have to start out with a condo.
Yeah.
But if you're paying under 2,000 a month, no one's going to evict you unless you don't make your mortgage payment. And sometimes you can have pets, so it's kind of nice. It's having that security again.
Yeah, and that's what I did. I started out with a condo, and then I'm on my third house at this point since I graduated college. So my kids have told me that we're not moving anywhere. So
that's why I've been where I am for 31 years. My daughter told me I could never sell the house.
So
isn't it funny how the kids own the houses now?
It is. So Amy, pleasure as always. Thank you very much.
All right.
So
It was nice talking with you.
All right, thank you.
Anyone can reach out with any questions. You know that, even anyone in your office. Okay.
Thank you.
All right. Have a nice day.
You too.
Bye-bye.
Foran Realty provides residential and commercial sales, vacation rental management, property management, and licensed house watching services to our valued customers throughout Cape Cod. If you're interested in any of these services, we'd love to talk to you. After all, we love the Cape and show it. We can be reached at 508-385-1355. We look forward to hearing from you.